Hello, I'm MaryAnn. China made a splash in the market announcing broad economic reforms, everything from relaxing the restrictions on investments to changing the 3-decade-old one-child policy that sent baby product companies higher. Is China once again the market darling, and what does it mean for opportunities in other parts of Asia? I'm joined today by Andrew Graham, who's Investment Director for Asia at Currie Investment Management, and he's also manager of the TD Asian Growth Fund, joining us all the way from Edinburgh, Scotland. So welcome, Andrew.
Thank you. It's nice to be here.
Nice to have you. So tell me, what did you take from the announcement in China?
Well, there's a few things here that are really important. The first one is that there is a reform process and it's ongoing, and that the new leadership are empowered to actually execute on these things. Anything that happens in China that allows for more efficient allocation of capital is a positive, but you've got to balance that against the fact that the natural growth rate of the Chinese economy has decelerated to what it was maybe 5 years ago. You've got a workforce which is no longer growing, and productivity, while positive, hasn't been accelerating. So the natural rate of growth of the economy is lower than it was maybe 5 to 10 years ago. However, reform is good because it means efficiency will be enhanced. It creates more opportunities for both local and international businesses in the country.
So if this does work to spur the economy on, what does that mean for the rest of Asia?
Well, it's fantastically positive because it's a bit like the old adage that when America sneezed, the rest of the world would catch a cold. Well, it's not dissimilar within an Asian context for China. It's the largest economy in the region. It sucks in an awful lot of imports from raw material producers. But not only that, it's also a key engine of trade growth within the region for manufactured goods as well, and also for professional services, whether it's financial or consulting or elsewhere. So it's a good thing.
So when you look at all of Asia, are there certain regions that are undervalued?
Yes, well, absolutely. And it's always the case in any market environment. Right now, we find Australia generally to be a bit more expensive, and also Taiwan. And it's actually no surprise to us that these are the countries, the stock markets, where the dividend payout ratios tend to be the highest. And as you're well aware, over the last year or so, there's been a very strong demand for high dividend paying stocks, and that's driven an awful lot of these stocks to quite high valuations now.
So are there opportunities?
Absolutely. So within China itself, that's one of the lower valuation multiples in the region is in China itself, but again for good reasons. But also elsewhere in the region, some parts of emerging Asia, Thailand we think is very attractive. There's some very well-run businesses there that trade at attractive multiples. Even in countries that are challenged right now, for example in India, we have some companies we're invested in there that have superb long-term growth prospects, and current valuations don't reflect those at all.
And you brought a couple of examples.
Yes, we have indeed. So for example in India we own Maruti Suzuki, which is the largest manufacturer of small compact cars in the Indian market, and it's owned by Suzuki of Japan. And so it's got extremely strong sort of corporate culture, and a very strong manufacturing culture as well. And actually recently Suzuki have announced that they're going to use Maruti as the global manufacturing base for the small car exports through the rest of the region. And it's a vehicle ownership within India itself is very, very underpenetrated. So not only is there superb long-term growth within India itself, also from the point of view of exporting to the broader region, there's a tremendous opportunity as well. So
now, why is it underpenetrated? Is it because lack of roads or just incomes?
You've really hit on the two main points. Number one, infrastructure generally is pretty poor. When you get outside the big cities, the road infrastructure just isn't there. But secondly, it's income. I mean, GDP per capita in India is, it's the lowest in the region. And so while there is a large market for small cars right now, it's very small relative to what it might be in 10 years' time, 15 years' time, which is why we like it. There's a very long-term secular growth dynamic there.
Okay, let's look at another example.
Well, another example, completely different business, is a firm that we've been invested in for a few years now, is a company called AIA, which is an insurance company listed in Hong Kong, but it's really a pan-Asian insurance company. They now operate in 17 different countries within Asia. It used to be part of the US insurance group AIG and was spun out a few years ago. The US government required them to spin it out, as you recall. And the exciting thing about this company is that they've been in their markets for a number of years. I mean, they were set up in Asia back in the late 1920s. So they've been in their markets for a very long time, but notwithstanding that, the products that they're selling, basic life insurance plus other protection products around it, are still massively underpenetrated in these markets. And so there are, there's decades of growth ahead. And that's, again, it's a company we like. It's very well managed. They generate a lot of capital. They reinvest in their business. But they're in very strong growth markets so that can absorb the capital they generate, so that it can unlock a tremendous compounding effect for investors.
And what about one more example?
One more. Okay, so another company that we own is listed in Singapore called Global Logistics Properties. Now, although it's listed in Singapore, it actually doesn't do any business in Singapore. It's operating in 3 markets principally. They build and operate modern logistics facilities in China, in Japan, and in Brazil. These are large markets that require modern logistics facilities. And for example, Global Logistics are the go-to guy for logistics services, warehousing services for Walmart in China, and also Amazon use them in China. So, there's where you've got a large or a growing modern retail channel and a burgeoning sort of internet-driven sector that requires logistic fulfillment. There you have the need for modern warehousing facilities, and that's where Global Logistics is there to meet that need.
Interesting. So how do you physically invest? Like, are you buying the companies directly on the exchanges or ADRs? How does that work?
No, almost always directly on the exchanges. We have a trading team based out in Asia in our office in Singapore. They do the actual physical buying and selling of the shares for us. And my team, while we're based in Edinburgh, we spend a lot of our time traveling around the region, and some of my team are permanently based in the region too. So we're physically meeting a huge number of companies every year, and we invest directly in their stocks.
All right. Well, thank you very much, Andrew.
My pleasure.
I've been joined by Andrew Graham, who is Investment Director for Asia at Martin Currie Investment Management. Thanks for watching. Join us again next time. Before you decide to invest, make sure you do your homework and ensure that the investment is aligned to who you are as an investor, including your asset allocation and your tolerance for risk.